Investing for Beginners: How to Start Building Wealth with Just $100. Welcome to another insightful episode of Wealth Rise, where we help you unlock the keys to financial success and wealth building. Whether you're in your 20s, 30s, or beyond, today's episode is designed to give you the tools you need to start building wealth, even if you only have $100 to begin with. Investing is often seen as a complex and intimidating activity reserved for the rich or financial experts. But that's a myth. With the right mindset and tools, you can begin investing today, even with a modest amount like $100, and start the journey toward financial freedom. Today, we're going to break down how you can start building wealth with just $100. Yes, you heard that right, $100. While it might seem like a small amount, with the right approach and tools, $100 can be the beginning of something much bigger. I'll explain how you can get started, where to put your money, and how to make the most of your investment, even if you're a complete beginner. So grab a pen and paper, because this episode is packed with practical tips to help you start investing today, regardless of your budget. Before we dive into the steps, if you find this episode helpful, please be sure to like, share, comment, and subscribe to Wealth Rise so you can get more practical financial tips to help you rise to financial success. Why $100 is a good start for investing? First, let's address the myth that you need thousands of dollars to start investing. $100 is actually a fantastic starting point for beginners, and here's why. It's manageable. If you're just getting started with investing, committing $100 is a manageable risk. It's a small enough amount to experiment with without putting too much of your financial stability on the line. Compound interest. Even small amounts of money, if invested wisely, can grow significantly over time through the magic of compound interest. Compound interest works by earning interest not just on your original investment, but also on the accumulated interest. The earlier you start, the more your money will grow. The power of consistency. $100 might not seem like much, but if you consistently invest small amounts every month, that money can start to build up quickly. Even starting with a modest $100 can create a habit that sets you up for larger investments in the future. Step 1. Determine your investment goals. Before you start investing, it's important to define your goals. Investing isn't just about putting your money into something and hoping it grows. You need to be strategic and intentional. Ask yourself a few key questions. What are you investing for? Are you saving for retirement, a down payment on a house, a rainy day fund, or simply to grow your wealth over time? What is your time horizon? How long are you willing to let your money sit before you need it? If you plan to use the money in the next few years, you'll want to take less risk. If it's for long-term goals like retirement, you can afford to take more risks. How much risk are you comfortable with? Risk and reward go hand in hand in investing. Some investment options offer the potential for high returns, but come with higher risk. Others might be safer, but yield slower growth. Answering these questions will help you choose the right types of investments for your situation. Once you've clearly defined your investment goals, you can begin the process of selecting the right types of investments. Whether you're investing for retirement or simply looking to grow your wealth over time, setting a clear objective will help you choose investments that align with your timeline and risk profile. Step 2. Choose the right investment platforms. Now that you know your goals, it's time to figure out where to invest your $100. In today's world, there are plenty of platforms that allow you to start investing with small amounts of money. Here are a few popular options. 1. Robo-advisors. Robo-advisors are online automated investment platforms that manage your investments automatically based on your risk profile and financial goals. These services are typically low cost and easy to use for beginners. They will automatically create and manage a diversified portfolio of low-cost index funds and ETFs, exchange-traded funds. Popular robo-advisors like Betterment, Wealthfront, or SoFi Invest create diversified portfolios for you based on your preferences and risk tolerance. Why choose a robo-advisor? Low minimum investment. Many robo-advisors have no minimum investment requirement or low minimums, making them perfect for beginners. Automated. Once you choose your investment preferences, the the robo-advisor takes care of the rest. Low fees. Robo-advisors generally charge lower fees than traditional financial advisors, which means more of your money stays invested. Example, if you invest your $100 in a robo-advisor like Betterment, they will automatically invest in a diversified portfolio based on your goals and risk tolerance, and you don't need to worry about selecting individual stocks or assets. Number 2, brokerage accounts. A brokerage account gives you more control over your investments. If you want a little more control over your investments, you can open a brokerage account. Fidelity, Charles Schwab, and TD Ameritrade are all popular platforms that allow you to start with as little as $100. A brokerage account allows you to buy and sell individual stocks, bonds, ETFs, and mutual funds. Why choose a brokerage account? Greater control. You have the freedom to choose your own investments. Access to stocks and ETFs. You can directly buy shares of companies or ETFs, exchange-traded funds, which can provide immediate diversification. Low fees. Many brokerage accounts have zero commission fees for stock and ETF trades, meaning you can keep more of your returns. Example, if you choose to invest in an ETF like the SPDR S&P 500 ETF, for just $100, you'll be buying into a fund that tracks the performance of the top 500 companies in the US, providing you with instant diversification. Number 3, micro-investing apps. Micro-investing platforms like Acorns or Stash allow you to start investing with very small amounts of money. For example, Acorns lets you invest spare change by rounding up your everyday purchases to the nearest dollar and investing the difference. With just $5 or $10, you can begin building your portfolio. Why choose micro-investing apps? Start with small amounts. You can begin investing with very little money and still grow your wealth over time. Some platforms, like Acorns, allow you to start investing with as little as $5. Automatic investment. These apps automate investing by rounding up your purchases and investing the difference, making it easy to invest passively. User-friendly. These apps often provide a set-it-and-forget-it approach to investing, making them perfect for beginners who don't want to research stocks or assets on their own. They are simple to use, especially for beginners. Example, if you're someone who buys a coffee for $3.50, Acorns might round up that purchase to $4 and invest the remaining 50s automatically, building your savings over time. Step 3. Invest in low-cost, diversified options. Diversification means spreading your investment across different assets, stocks, bonds, ETFs, to reduce risk. As a beginner, when you're starting with a small amount of money, diversification is key. It's important to keep things simple and low cost. Diversification is one of the best ways to minimize risk while maximizing growth potential. Instead of putting all your money into one stock, you can invest in diversified funds like ETFs and index funds, which allow you to spread your $100 across hundreds or even thousands of stocks, bonds, or other assets. Exchange-traded funds, ETFs. One of the best ways to diversify with a small amount of money is to invest in ETFs. ETFs are funds that track an index like the S&P 500 or the NASDAQ 100 and allow you to invest in hundreds or even thousands of stocks with a single purchase. For beginners, ETFs are an excellent option because they offer instant diversification, are cost-efficient, and can be bought and sold like stocks. By buying an ETF, you're automatically getting a diversified portfolio for a relatively low cost. Why choose ETFs? Diversification. By investing in an ETF, you're essentially buying a small portion of hundreds or even thousands of different companies. Low fees. ETFs have lower expense ratios than mutual funds, making them a cost-effective investment option. Liquidity. You can buy or sell ETFs anytime during market hours, which gives you more flexibility than other types of investments. Example, if you invest your $100 in the Vanguard Total Stock Market ETF, VTI, you're essentially buying a small portion of over 3,500 companies in the US, which gives you instant diversification. Index funds. Another excellent low-cost, diversified option is an index fund. These mutual funds track the performance of a specific market index, like the S&P 500 or NASDAQ 100, and allow you to invest in a broad market segment with just a small amount of money. These are mutual funds that track the performance of a specific index. While they often require a higher minimum investment than an ETF, Some platforms allow you to invest in them with as little as $100. Why choose index funds? A broad market exposure. Index funds typically track a broad market index, such as the S&P 500, so you're investing in a large, diverse set of companies. Low fees. Like ETFs, index funds have low management fees, which means you keep more of your returns. Long-term growth. Historically, index funds have provided steady long-term growth, making them an excellent choice for beginners focused on building wealth over time. Fractional shares. Some platforms, like Robinhood, SoFi Invest, and Stockpile, allow you to buy fractional shares of stocks. This is a game changer because it means you don't need hundreds or thousands of dollars to invest in high-priced stocks like Tesla or Amazon. You can buy a fraction of a share for as little as $1. Why fractional shares? Buy expensive stocks with little money. You can invest in companies that would normally be out of reach with just $100 by purchasing fractional shares. More control. You have the flexibility to choose individual stocks and still build a diversified portfolio. Step 4. Be patient and stay committed. The secret to growing your wealth through investing is time and consistency. Starting with $100 is great, but the real power comes from sticking to your plan and adding to your investments over time. Investing is a long-term game. When you're starting with just $100, the goal isn't to get rich quickly, it's to build wealth over time. The power of compound interest means the more time your investments have to grow, the greater the results will be. Dollar cost averaging. One strategy to grow your investments is dollar cost averaging, DCA. DCA involves investing a fixed amount of money at regular intervals, regardless of market conditions. This helps smooth out the ups and downs of the market and reduces the risk of investing all your money at once when the market is high. For example, if you invest $100 every month, you'll be buying stocks or ETFs at different prices, which means you won't be putting all your money at risk when the market is volatile. Reinvest your earnings. As your investments grow and generate returns, you can reinvest those earnings. Many platforms offer automatic dividend reinvestment plans, DRIPs, which allow your dividends to automatically buy more shares of the fund or stock. This helps your investment grow faster over time. The key here is staying committed to your investment strategy and continuing to contribute. If you can add $50, $100, or even $200 per month, you'll see your investment grow exponentially over time. Conclusion. Investing is for everyone. Start with $100 today. Starting to invest with just $100 is a fantastic way to begin your journey to financial freedom. The most important part of investing is getting started, and the sooner you start, the more time your money has to grow. You don't need thousands of dollars to begin building wealth. With just $100, you can make meaningful progress toward your financial goals. The key takeaway: you don't need a lot of money to begin investing. $100 is a fantastic starting point, and it's the discipline and consistency that will make the real difference in your financial journey. Remember, it's not about how much you start with, it's about consistency, diversification, and patience. If you found this episode helpful, make sure to like, share, comment, and subscribe to WealthRise for more daily financial tips and strategies. We're here to help you rise toward a brighter, financially secure future. Let's start investing today, together.